So much for a really strong Uptober start. I keep hearing this word Uptober, and obviously it's based on how crypto or stocks or asset classes typically do in the month of October. So they call it Uptober because it's typically a good month for crypto. Maybe you know this, maybe you don't, but now you do. So September is typically not a good month for crypto, but we still had about a 7% gain in Bitcoin in the month of September, which is probably the best we had in several years. Now, October typically performs a lot better than September. I looked at the history of Bitcoin, and Bitcoin typically rises 13% in the month of October alone. So that's really strong. But we had a 7% increase, about a 7% increase this last September. And obviously, Bitcoin started off the month pretty poorly. We're going to get into that right now. So let's take a look at the Bitcoin chart. This is a longer view chart from March when we hit an all-time high at around 73 and change, just about 74. And here we are at the start of October down at 61 and change. It tried to bounce below that level, but it found some support around 60,000 and change, which is good. So it didn't dip into the 50s. I'm a buyer anytime Bitcoin currently dips into the 50s. But I'm going to do something a little different. I'm going to show you that at the end of this video. But look here. So some people will show you this line right here and say, we broke out. If you see right here, let me draw. We broke out. We broke out of this line and we went up. Well, let's take a look at the line from the start of when we hit almost full all-time high. And so we did hit all-time high, and this line, it bounced off, and this line makes a lot of sense. Look, resistance, this kind of broke out, but resistance, oh shoot, just moved my line. Let's move that back, just there. Okay, it hit resistance here, and again, if you're following this line, we just hit resistance, bounced off it, but then we went off this other line. It looks like we're gonna bounce off that. So as long as it doesn't break below this level of support around 60,000, what could it do next? Well, obviously, there's a lot of factors in today and yesterday's hit to crypto. We'll talk about that in a second, but can it bounce off this line and break through here? That's what a lot of people are thinking it's going to do. I don't know for sure, but I'm going to tell you how I'm going to play it. But before we get into that, look at today. Crypto bubbles, boom, all red. The week, they were soured for the week because we had a really bad day in crypto today. Was it the end? No. Pepe down 6.4%. Sol down 5.2%, Solana, Litecoin down 5.4%. Where's the big dogs? Let's do by market cap and day. Bitcoin down 3.6%. That's a fair amount for Bitcoin in one day. So Ethereum down 5.9%, BNB down 3.7%, Sol. So not a great day for crypto. But if you look at this is kind of neat. We're back to the fear. More fear than greed. So when it goes in the fear sector is when I like to look at putting in long positions. I don't want to buy into the fear and do shorts because the profit or the possibilities or the opportunities are already gone. It's when you're in the fear section where people in the greed section, that might be a good opportunity for a short. However, this is not financial advice. I'm not a financial advisor. Do your own research and make sure that trading is right for you. It might not be right for everybody. So another thing I like to look at, why did crypto dump today, 3.5% on Bitcoin? Well, there's two major factors. Yesterday, it started off with Federal Reserve Board Chair Jerome Powell talking, and he mentioned that people are baking in about another 100 basis points cut for the rest of the year. They had a 50 basis point. There's two more meetings, one in November, one in December, and the markets were baked in more than what they talked about yesterday. So Jerome kind of shocked the system by saying, look, we only plan on two more cuts, but maybe 50 basis points. Well, obviously the market wasn't expecting that because the market reacted to that news by sell-off, whether it's stocks, crypto. Bond markets did okay, but crypto didn't do great today. Now, so why is this important? If you look at the rate cuts by the Fed, the predictions, they're predicting, this is the new data that says 25 basis points in November. It was 50 basis points. Why does that matter? The more they cut the rate, the more liquidity there is in the market, the more people that have cash to buy things like crypto or stocks or things like that. Instead, they're paying that money on their debt. And companies love cheap money. And that's why the stock market typically does well. Investors and companies love cheap money. And then I know it's been talked about in a lot of channels, but look, if I'm getting 5% in my checking account, I don't really need to go out there to the rest of the world. 5% is not terrible, and it's very risk-free. But when that goes down to 3%, 2%, now I'm going to have to go outwards to find out ways to, replace my return. So I'm going to look at more of a basket of goods. Some might range from very risky, like crypto is considered very risky and volatile, to some that are less risky, like stocks or bonds, I should say, or fixed income instruments. So here we are. We got fear going on. Now in the fear sector, we got some significant losses, also based on a pretty big event that happened today, which was the Iranians bombing the Israelis, and to the tune of 200 missiles. And to me, this is a test of our current administration. They're just testing what is the Biden-Harris administration going to do? How are they going to respond? Do we have free will to do whatever we want? This scares the market. The market's worried about this because war, is imminent between Israel and Iran, possibly, unless there's some good politicians that get together and make sure that doesn't happen. But this has been brewing for years, and so they've been testing. They fear that the current administration isn't going to do anything about it. So we'll see about that front. This hurts the markets, but I think there's an opportunity, for me at least. I'm looking at the opportunity to go long, on a Margex. I use Margex for some leveraged trades, but I'm going to go like a low leverage long on Bitcoin. That's what I'm going to do. I'm not telling you to do that by any stretch. If you trade Margex, no KYC, I'll put the link down below. They have a lot of, reasons to sign up, but no KYC, makes it a little easier to get your money in and out. You can trade same day. So I'm not telling you to do that. If you do it, great. Don't come to me. If you lose money, try to be conservative. The 100X is for the degens. If you are going to trade, really learn what you're doing. 95% of traders lose money, including myself. So don't do what I'm doing. I'm trying to figure out how to do this. And when I have a winning strategy, I'm going to tell you. But I'm going to share this trade with you on Sunday. It looks like it just had a little pop there. But I'm going to trade how this trade is going on Sunday. We'll take a look at it again. So just a quick recap. Bitcoin September typically is about a 0.68% return. Historically speaking, in September, we had an over 7% return this year. You look at October, typically it's about 13% and change in October. Can we do that again this October? I don't know. Did September take some of October's wind out of its sails? And now we got to make up for the loss we had in the beginning of September, and to see how crypto or to Bitcoin is going to react. I don't know. Does Bitcoin like the Fed Powell news yesterday? Probably not. Definitely didn't like it. It digested that and the Iran missile strike today, and you see what happens. 3.5% loss in one day. That's, if that was a stock, that'd be a major move. And crypto, not the end of the world. I'm a long holder of Bitcoin. I believe in why it was created and what it's doing, and its adoption rate in the last year has just been absolutely magnificent. To see so many people, retail investors, they're buying IBIT, they're buying the Federal or the Fidelity one, they're buying the Grayscale, they're buying these on regular stock exchanges, these ETFs, and so it's bringing a lot of liquidity into the Bitcoin market. And now with what China did, you're going to see China, that amount of money they're throwing into their economy is going to bleed into crypto. You better believe it. So there's a lot more people out there with disposable income or disposable cash that they need to put somewhere. Might it end in stocks? Yeah. Bonds, probably. Crypto, more than likely. So there's a lot of good things positive in the market to make me think that this is the market dip we're seeing today and today for the most part, and last night, is mainly due to the fear of the missile strike and what Powell said. But you got to remember what Powell said. They're going to be very data driven and data dependent. So if the numbers don't look good, if the inflation numbers look good for inflation cooling, unemployment numbers don't look good, like there's more unemployment, you're going to see them make some fast moves because they're trying to protect from having a hard landing, which is the word that they use, or the phrase that they use for recession. They don't want to use that word recession. They use the words hard landing or soft landing. So that's about it. So what am I doing? I'm going to put on a low leverage trade, probably a couple $100, and I'm going to throw that on Margex or BTCC. I'll let you know on Sunday when I do an update. I'll let you know how it's doing. What's going on with that trade? Did I lose my ass? Or am I in the profit? That's all I got. Let me know what you're doing down below. Like, subscribe, share, do all the things the kids say to do, and I'll see you next time.